All right, everybody, welcome back for another deep dive. Today we are going to be talking all about FHA loans. You know those government-backed mortgages
Right.
that a lot of people use to buy their first house?
Mm-hmm.
But they can be a little bit confusing at first, so we're going to try to demystify them a little bit,
Yeah.
break down exactly what they are, all the benefits, all the drawbacks,
Sure.
and really help you figure out if this is the right type of loan for you.
Yeah.
So to start us off, what exactly is an FHA loan?
Well, an FHA loan is basically a mortgage that is insured by the Federal Housing Administration.
Okay.
That's the FHA part of it. And it's designed to make homeownership more accessible for people, especially first-time home buyers or people who might not have like the best credit or the biggest savings for a down payment.
Got it. So it's basically like the government's kind of stepping in to help people who otherwise might not be able to get a mortgage.
Exactly.
Okay. So why? Why would the government get involved in mortgages?
Well, it's a really interesting history, actually. The FHA loan program was actually created during the Great Depression.
Oh, wow.
Yeah, because back then the housing market was really struggling and it was really hard for people to get mortgages. So the government stepped in and they said, hey, we're going to create this program to insure these loans so that lenders feel more comfortable lending money to people.
So that's where that government backing comes in.
Exactly.
Okay. Now, one of the big benefits that we hear a lot about with FHA loans is the lower down payment.
Right.
Can you tell us a little bit more about that?
Yeah, so with an FHA loan, you can put down as little as 3.5%
Wow.
of the home's purchase price, which is significantly lower than the 20% that's typically required for a conventional loan.
Yeah, that's a huge difference. I mean, 3.5% versus 20%.
Yeah.
That could be tens of thousands of dollars.
Exactly. Especially in today's market,
Yeah.
where home prices are so high.
Okay, so we got that lower down payment,
Yeah.
but there's always a trade-off, right?
Right.
There's no such thing as a free lunch.
Exactly.
So what's the catch with FHA loans?
So the main catch is mortgage insurance.
Okay.
Because you're putting down such a small down payment, the lender is taking on a bit more risk. So to protect themselves, they require you to pay mortgage insurance.
What exactly does that do?
So mortgage insurance basically protects the lender if you default on the loan.
Okay.
So if for some reason you can't make your payments anymore, the mortgage insurance will kick in, and it will help the lender recoup some of their losses.
So it's basically like an insurance policy for the lender.
Exactly.
Okay. Now, with conventional loans, you don't always have to pay mortgage insurance.
Right. That's one of the big differences. With a conventional loan, if you put down 20% or more, you typically don't have to pay mortgage insurance.
So that could potentially save you some money.
It could, yeah. But you have to weigh that against the fact that you have to come up with that 20% down payment.
Right. So there's pros and cons to each.
Exactly.
Okay. So let's talk a little bit more about the mortgage insurance with FHA loans. How exactly does that work?
So there are two types of mortgage insurance premiums with FHA loans. There's an upfront mortgage insurance premium, and then there's an annual premium.
Okay, so tell me about the upfront premium first.
So the upfront premium is a one-time fee that you pay when you close on a loan, and it's typically 1.75% of the loan amount.
And how do you usually pay that?
You can either pay it out of pocket at closing, or you can roll it into the loan amount.
Okay. And then what about the annual premium?
So the annual premium is a percentage of your loan amount that you pay every year. And it's divided into 12 monthly payments. So it's just added to your regular mortgage payment.
Okay. And how long do you have to pay that annual premium?
That depends on a couple of factors, like the size of your down payment and the term of your loan. But in many cases, you'll have to pay for the entire life of the loan.
Okay, so that's something to keep in mind. If you're thinking about getting an FHA loan,
Definitely.
you're going to have that mortgage insurance payment.
Yeah.
Potentially for the life of the loan. All right, so we've talked about the down payment. We've talked about the mortgage insurance. Now, who exactly are FHA loans for?
So FHA loans are really designed to help a wide range of borrowers. As we mentioned, first-time home buyers are a big target audience. People with lower credit scores, people who maybe have had some financial challenges in the past. FHA loans are a little bit more forgiving than conventional loans.
Okay.
And also people with limited savings for a down payment. So if you're struggling to come up with that 20%, an FHA loan could be a good option.
So it's really about making homeownership more accessible.
Exactly.
Okay. So it sounds like it could be a good option for a lot of people. But I'm guessing there's still some requirements, right?
Oh, absolutely. There are definitely still eligibility requirements. So you'll need to have a minimum credit score.
Okay.
Typically, that's going to be around 580, but it can vary depending on the lender. You'll also need to have a manageable debt-to-income ratio.
Okay, and what does that mean?
So that basically means that your monthly debt payments shouldn't be too high compared to your income.
Got it.
And lenders will look at that to make sure that you can afford the mortgage payments.
Okay, so they want to make sure you're not overextending yourself.
Exactly.
Right.
And then you'll also need to have a steady employment history.
So they want to see that you've been working consistently.
And that you have a reliable source of income.
Makes sense. So those are some of the basic requirements. But I'm guessing it's always a good idea to talk to a lender and get the specific requirements.
Absolutely. Because it can vary from lender to lender.
Okay. Now, we've been talking a lot about buying a home. But what about refinancing? Can you use an FHA loan to refinance an existing mortgage?
Yes, you can.
Okay.
So that can be a good option for homeowners who maybe want to lower their monthly payments or switch from an adjustable rate mortgage to a fixed rate mortgage.
Okay.
Or even if you just want to tap into your home equity to do some home improvements or something like that.
So there's some flexibility there. All right. Now, I've heard that FHA loans have some specific requirements when it comes to the property itself.
Right.
Can you tell us a little bit more about that?
Yeah, so FHA loans do have certain property standards that the home has to meet.
Okay.
And this is basically to protect both the borrower and the lender. They want to make sure that the home is safe, habitable, and in good condition.
So it's not just about the borrower's finances. It's about the actual property itself.
Exactly.
Okay. So what are some examples of things that they might look for?
So some common things that can cause a property to fail an FHA appraisal would be things like major structural problems, like foundation issues, or roof damage.
Okay.
They'll also look for safety hazards, like outdated electrical systems or plumbing problems. And they'll also check for things like lead paint or asbestos.
So these are all things that could potentially be costly to repair.
Right.
And so they want to make sure that the borrower is aware of those potential costs before they buy the home.
Okay. So now who's actually in charge of all these rules and regulations?
So the FHA loan program is overseen by the Department of Housing and Urban Development, or HUD. And HUD sets the guidelines for the program. And they make sure that lenders are following the rules.
So it's not just the FHA doing its own thing. It's part of this larger government agency.
Right.
Okay. So we've talked about a lot of the details of FHA loans, but what about the actual process? What does it look like to actually go through the process of getting an FHA loan?
So the first step is to find an SHA-approved lender.
Okay.
And you can usually find a list of those lenders on the HUD website. And once you've found a lender, you'll need to get pre-approved for a loan.
Okay. And what does that involve?
So pre-approval basically means that the lender has reviewed your financial information and they've given you an estimate of how much money they're willing to lend you.
So that gives you a good idea of what your price range is.
Exactly. So that you don't waste time looking at homes that you can't afford.
Makes sense. All right. So once you've found a home that you like and your offer's been accepted, what happens next?
So then the lender will go through a process called underwriting.
And this is where they really dig deep into your finances. They'll verify your income, your employment history, your credit history, and they'll also make sure that the property meets all of the FHA requirements.
So it's basically double check to make sure everything's in order.
Exactly.
All right. And then once that's all done, what's the final step?
So the final step is the closing.
Okay.
And this is where you'll sign all of the final paperwork. You'll pay any closing costs, and then you'll officially become a homeowner.
All right. So it's a bit of a process, but hopefully it's worth it in the end.
Definitely. When you have the keys to your new home.
Exactly. So as we wrap things up here, what's the key takeaway that you want our listeners to remember about FHA loans?
I think the key takeaway is that FHA loans can be a really great option for people who might not qualify for a conventional loan. They offer lower down payments, more flexible credit requirements, and they can really help to make homeownership more attainable.
But of course, it's important to do your research. Talk to a lender. Make sure you understand all of the terms and conditions before you commit to anything. So if you're thinking about buying a home and you're not sure if you qualify for a conventional loan, an FHA loan might be a good option for you.
Definitely.
All right, well, that's going to do it for our deep dive on FHA loans today. Hopefully you learned a lot, and we'll catch you next time for another deep dive.